Why are banks choosing the XRP Ledger? It's a question that's getting more attention every time a major financial institution announces another blockchain initiative. Recently, discussions about banks issuing stablecoins on the XRP Ledger sparked excitement across the XRP community. Some people immediately saw it as proof that mass adoption has already begun. Others weren't convinced. So what's really happening? Are banks actually choosing the XRP Ledger? If they are, why would they choose it over dozens of other blockchain networks? And perhaps the biggest question of all, does building on the XRP Ledger automatically mean banks are buying XRP? In today's video, we'll separate facts from assumptions and explain why the XRP Ledger continues to appear in conversations about institutional blockchain adoption. Let's start with one important point. When people hear that a bank may issue a stablecoin on the XRP Ledger, many immediately think the bank must first buy billions of dollars worth of XRP. That's not necessarily how it works. The XRP Ledger is a blockchain network. XRP is the native digital asset of that network. While they're closely connected, they're not exactly the same thing. Think of it like the internet. A company can build a website using the internet without owning the internet itself. In a similar way, organizations can use blockchain infrastructure for certain applications while deciding how they want to manage digital assets within their own business models. So why would banks even consider the XRP Ledger? The answer comes down to solving real-world problems. Traditional financial systems often involve multiple intermediaries, slower settlement times, higher operational costs, and complex reconciliation processes. Financial institutions have been looking for better infrastructure for years. That's one reason tokenization has become such an important topic. Instead of relying entirely on traditional systems, tokenization allows real-world assets, such as deposits, bonds, funds, or other financial instruments, to be represented digitally on a blockchain. The goal isn't simply to use blockchain because it's new. The goal is to make financial systems faster, more efficient, and easier to operate. This is where the XRP Ledger has attracted attention. It's designed to process transactions quickly, with relatively low transaction costs and an architecture that has been operating for many years. Those characteristics naturally make it one of several networks institutions evaluate when exploring digital asset infrastructure. Recently, industry discussions have also highlighted that some financial institutions are exploring stablecoins on public blockchain networks, including the XRP Ledger. That has renewed interest in XRPL's role within the broader tokenization ecosystem. But here's where many investors accidentally jump to conclusions. Just because a bank explores the XRP Ledger, or even launches a stablecoin on it, doesn't automatically mean millions of XRP tokens are being purchased the next day. Infrastructure decisions and investment decisions are two very different things. Understanding that distinction helps explain why institutional blockchain news doesn't always lead to an immediate price surge. So, if banks are interested in the XRP Ledger, where does XRP actually fit into the picture? This is where a lot of confusion begins. Many people assume that the moment a bank builds on the XRP Ledger, it must immediately start buying large amounts of XRP, but the reality is more nuanced. The XRP Ledger is designed to support a wide range of financial applications. A bank could issue a stablecoin, a financial institution could tokenize real-world assets, an asset manager could create tokenized investment products. Each of these use cases may involve the XRP Ledger in different ways, depending on the institution's goals and how it chooses to implement the technology. That means using the network and using XRP are related, but they aren't always the same decision. So why are institutions even exploring blockchain in the first place? The answer is simple: efficiency. Today's financial system still relies on multiple intermediaries, fragmented databases, and settlement processes that can take longer than many people realize. Even though digital banking feels instant to consumers, much of the infrastructure behind the scenes is still being modernized. That's why tokenization has become one of the biggest trends in global finance. Instead of moving paper records or relying on disconnected systems, institutions can represent assets digitally on a blockchain, making transfers, ownership records, and settlement more efficient. The competitor's transcript points to growing interest in banks issuing stablecoins on public blockchains, including the XRP Ledger, as part of this broader tokenization movement. But here's something that's often overlooked. Banks don't choose financial infrastructure based on social media excitement. They evaluate factors like security, reliability, transaction speed, operating costs, scalability, regulatory considerations. These decisions usually involve years of testing, pilot programs, compliance reviews, and risk assessments before any large-scale rollout happens. That's why institutional adoption often looks much slower than crypto investors expect. And that's perfectly normal. Think about how long it took businesses to move from physical servers to cloud computing. The technology existed long before it became the industry standard. The same gradual process often happens with financial infrastructure. Now, here's the question many XRP holders care about. Could wider adoption of the XRP ledger eventually benefit XRP itself? Potentially, but the answer depends on how the ecosystem develops over time. As more developers, financial institutions, and businesses build applications on a network that can strengthen the overall ecosystem, a growing ecosystem can attract more participants, more liquidity, and more innovation. However, the relationship between network growth and an asset's market price is never automatic. Markets also consider factors such as regulation, investor sentiment, liquidity conditions, and the pace of real-world adoption. That's why experienced investors often focus less on a single announcement and more on long-term trends. One bank exploring the XRP ledger is interesting. Several institutions building real products over time is much more meaningful because sustainable adoption isn't measured by headlines, it's measured by continued usage. So, why are banks choosing the XRP ledger? The answer isn't because of hype, it's because financial institutions are constantly looking for infrastructure that can help them operate more efficiently, reduce costs, and prepare for a future where more assets exist in digital form. That doesn't mean every bank will choose the XRP ledger. It also doesn't mean every institution that builds on the network will immediately buy large amounts of XRP. Those are separate decisions. What's important is understanding the bigger picture. When respected financial institutions begin exploring a blockchain network, it suggests they're evaluating its technology, not just following the latest trend. And that's why many investors are paying close attention to the XRP ledger. The real story isn't whether one announcement causes XRP to jump 20% overnight. The real story is whether adoption continues to grow over the coming years. If more banks, payment providers, asset managers, and fintech companies continue building real-world applications on the XRP ledger, that would be a far more meaningful signal than any single headline. Because long-term value is usually built through consistent adoption, not one big announcement. So instead of asking, why didn't XRP explode today? A better question might be, is the XRP ledger becoming part of the future financial infrastructure? That's the question worth watching. Now I'd like to hear your opinion. If banks begin issuing stablecoins and tokenized assets on the XRP ledger, do you think that could eventually strengthen XRP's long-term position? Share your thoughts in the comments below. I read as many comments as I can. If you enjoyed this fact-based breakdown and want more videos that explain XRP, Ripple, institutional adoption, and blockchain technology without the hype, make sure to like this video, subscribe to Ojan XRP Insights, and turn on notifications so you never miss our next update. Thanks for watching, and I'll see you in the next video.